What's up, guys? It is Sam here, and I wanted to give an update on my options trading. Today is June 29th, 2019. If this is your first time here, my name is Sam, and I am trading options with Robinhood. Robinhood is a completely free brokerage platform that I use, and I recommend to people because it's 100% free to trade. You don't have to pay for the option contracts. You don't have to pay for the actual trade, but you do what's best for you. I started options trading. By the way, if you just want to hear the results, like I'm up 24+% in about 4 months, just under 4 months. So I will get more into the detail as the time goes on, but I'm going to talk more about strategy right now before I get into some of the more intricate details of this. So I started funding my account in 2018, and I was originally just putting the money into index funds, SPXL, which is a leveraged S&P 500 fund. And the aggregate of all of the contributions came to $4,287. So it's not a terribly large portfolio. $4,200, like $4,300. It's not that much. And the last contribution I made was on April 3rd. I started trading options on March 10th, or the Monday after that. I think March 10th might have been a weekend. So that following Monday after March 10th, with not a clear objective other than just making as much profit as I possibly could, without a tremendous consideration for the risk involved. So I took the $4,200, and within about a month and a half, 2 months, I made $11,000. So that was the portfolio value. So you take $11,000 minus what I contributed, $4,287. That's the delta of what I actually made in profit, and I was taking a lot more risk to get higher returns. Like, clearly it works, but then there's also the downside. So over the preceding month, after I hit 11,000 and change, portfolio went down to $3,800. So which means that I was losing $500 of my own money. And since then, I decided to change the way that I was doing things. Right? And you're like, duh, Sam, that's probably not a fucking smart strategy. Okay, well, thank you for that keen insight. Now, going forward, my objective, so this is after all these ups and downs, I'm still up 24% from my $4,287, which leaves the portfolio balance. So this is my Robinhood account. And I'm just going to go up here and press refresh so that you get to see. It's going to refresh the page here. And there is the portfolio balance as of 6/29. So my objective, what I'm trying to do, has changed and become a lot more clear on what I'm trying to achieve with this. So I've even taken the time to write it down so that there's much more clarity around what I'm trying to achieve. And I want to be able to make enough profit every week so that I can purchase 1 share of Tesla stock. If you want to watch more of my videos on exactly what I am trading, you can check out my channel and just put in options trading, and you'll see what comes up, or just options, and you'll see what comes up. It basically just credit spreads. So I want to be able to make enough profit every week to be able to purchase 1 share of Tesla stock. So I've been doing this for about a month now, and just purchasing 1 share of Tesla stock every week as I make more money. So the reason I want to do that, and also I want to go a little bit beyond that. So Tesla right now is at $223.86, right? So $224 roughly. I want to be able to make maybe $230 or $270 somewhere where there's a little bit of margin. I haven't come up with a intelligent or thoughtful way to consider how much extra might be a good target for, or benchmark for me to shoot for. And as I formulate or put some more thought into considering what might be a good margin to shoot for in terms of, so the price of it is about $225 a share, to have profit above and beyond that. Now, why do I want that? It's not just because I want the extra profit, it's twofold here. Because the first, as Tesla's price goes up, by the way, this is not like financial advice. You should do your own fucking research. Don't do what you see somebody on the internet doing. But I believe Tesla's stock price is going to go up in the long term. So that's 5+ years would be like the intermediate. So between the 5 to 10 year mark is where I'm looking at. So price is going to go up. So as the price goes up, the amount that I will have to make a profit every week also has to go up. And if you keep the base the same, then the percentage of the portfolio that I will need to profit from every single week, the amount of, if you looked at it as a percentage, right? If you have $1,000 portfolio and a share of stock is $100, that's, you need to make a 10% return every week, right? So if the price goes up to $200, now you need to make a 20% return every week. So to consider that the price is going to be going up over time, I want to, and this leads into the second factor, is because I want that percentage to actually be coming down. I don't just want to make enough to offset the increase. I want it to, say if I need to make, a certain, we'll call it 5% or something on a weekly basis. I don't want that to be just a constant 5%. I want that to actually be a declining amount, so that as the price of Tesla stock goes up, I don't have to just maintain the 5%. The Tesla stock can do whatever the fuck it wants, but I want that percentage if I need to make a 5% on a weekly basis. By the way, like, you don't have to believe this is possible or think that somebody can make 5% or whatever the case is. You can just follow along, press that subscribe button, and I'll tell you exactly what I do and if it's working or if it's not working, if I'm fucking losing money. But I think right now it's right around 5%. So I actually didn't do the math on that, so I won't be able to give that to you, but I want that to be coming down. So say in a month and a half, instead of being 5%, maybe it's 4.5% or 4.25% profit that I need to make. And then 6 months later, it's actually, on the weekly basis, I only need to make 2%. Now, why is that important to me? Because I'll be reducing the risk in each position I take, because I don't have to take as risky positions to be able to make that amount. You know what I mean? Like if the portfolio value is 5,000 and I need to make 5%, right? That's $500 or whatever, or that's $250 roughly. Now, if it goes up to 10% or $10,000 over time, but say the price of Tesla stays about the same, then the percentage that I have to make drops in half. So that's the objective, because then the position size and the actual positions can be less risky. And that is my thought process behind there. So we are just finishing up the month of June, and that's the recap I wanted to give. Right now, the only holdings I have are positioned for taking advantage of the belief that Tesla is going to outperform in the long run. So I have a two credit spreads open for expiration on August 16th. And those are positioned for a positive surprise for delivery. So I believe Tesla releases their second quarter earnings at the end of week 1 or the early part of week 2 or something in August. So this is why this is positioned this way, so that if you follow Tesla very closely, they're positioned to have a very positive second quarter from this is what analysts think that Tesla's going to do in terms of production and deliveries, but I believe that they're going to have a positive above that, you know what I mean, a positive delta above what estimates are. So that's why this is positioned this way. And then so far for the past 4 weeks, I've been purchasing 1 share per week in Tesla. So anyways, If you guys have any questions about any of this, let me know down below in the comments. Don't forget to subscribe if you want to follow along with this. I'm not sure if this is going to be a weekly series or a monthly series, or just more as more data comes out and I learn more through the process, or define my personal objectives in more detail. Anyways, if you guys have any questions or want to support the channel, share this video with somebody. Peace.